Our killer small business budget template will save you time and money. There's a catch to this, and I'm going to explain. But first, let me underscore some of what I've given you in the write-up. I strongly encourage you to read the write-up. The first thing is that we have to create a budget. We have to plan on revisiting this budget regularly. And recently, I showed you how to create a budget using QuickBooks Online. They have a budget feature built right into the product. But today, I'm going to do you one better. And I'm going to show you actually how to create the small business budget template that I use. And that's where the catch lies, is that I'm going to give you the template that you're going to see created in this video. So rest assured, the link will be provided. You can download it, but it's not the one you're going to want to use for your business, because the one you're going to want to use for the business, as you're going to see in the rest of this video, needs to be modeled after your chart of accounts. Your chart of accounts specifically describes how you've categorized all of your transactions. That list of accounts, the chart of accounts, is where your transactions live. So your budget, to be effective and to have maximum utility with respect to that budget, needs to be modeled after your chart of accounts specifically. And you're going to see, I'm going to create a template here in front of you using a sample QuickBooks company file. And if you follow the steps that I've got here as well as in the write-up, then you can easily create your own. You may have more accounts and it may span a longer timeline, but everything else is going to work exactly the same. So let's get into this. I'm going to run through the very steps that I've outlined for you in the write-up. Step one, we're going to run a monthly balance sheet. So we'll go to Reports, and we'll run the standard balance sheet. And let's just stick with this year to date to start with, but we're going to back it up to the last month that ended. And then we're going to total this by month. And we're going to run that. And now I'm going to duplicate the tab. And we're going to do step two, which is run a monthly profit and loss. Same process, slightly different report. Back to Reports, standard profit and loss. Note I'm in the recommended tab here. And again, we're going to adjust the date range to run through the end of last month. And we'll total by month, run that report. Boom. Next step, export these to Excel. We click this button here, export to Excel. Hopefully soon enough into it, we'll have a feature that lets you export directly to Google Sheets. But you're going to see it takes 2 seconds to get it from Excel to Google Sheets. So we're going to do the same thing with the profit and loss report. Save it. And now I have my downloads folder prepared. So here they are. Right, I'm going to move this onto my other screen. We're going to go over to my Google Drive folder where I keep all of my Fundera templates. And let's drag and drop these Excel files in. Okay, you see how quick that was? Let's grab the balance sheet. So I click it to select it, then right click it, open with Google Sheets. Okay, back over to the list. Let's do the same thing with the profit and loss. Select it, right click it, open with Google Sheets. And you're going to find that Google Sheets does everything you need it to. It does everything that Excel does. A lot of people, there's a myth out there that Google Sheets isn't as robust as Excel. Not true. In fact, I'd argue in many respects it's more robust, especially when you get into the co-authoring, right? And how easy it is to share this with other people. Even Microsoft Office 365 sharing, collaboration, co-authoring capabilities aren't nearly as good as Google Sheets. My opinion, of course, you're welcome to disagree, but I'll be more than happy to go head-to-head with you on that if you want. So now we need these both in the same sheet. I have a balance sheet and a profit and loss. So we're going to click on the tab down at the bottom here on the little drop down, and we want to choose Copy To. And because we've just created these, they're going to be in the recent file. So I want to copy it to the balance sheet one. And I'll choose Select. It says it was successful. Let's go over and find out. Sure enough, there's the balance sheet and the copy of my profit and loss. I can double click that second tab, get rid of the copy of language, and now I can close this one. And for that matter, I can delete everything else. In fact, first let's come back here and rename it and call it Cash Flow Projections. You will probably want to stick something in the title that indicates the name of the company that this is for, especially if you're somebody who happens to have more than one company. But also, now that we did that, we can clearly identify the one thing we don't want to delete. I can get rid of all these others, right? Let's remove them. I'm a big stickler for keeping the files clean. I can close my downloads folder on my other screen. And now we've got some work to do. So I'm just checking my list here. We've copied it to the balance sheet. We've renamed it. Now we have to build the statement of cash flows. Before we can actually even do that, a little housekeeping, which I didn't really mention in the write-up. I'm going to highlight these, the header rows here, because notice they're merged, right? So this guy over here unmerges them. It's going to get in the way if you leave them merged. Also, I don't need the total here in my profit and loss. Let's get rid of that. I promise you it will only create problems for you later on if you don't remember to do that. Same process here. I have the same keyboard shortcuts. Shift-click will highlight the range in between. Unmerge. And now while I'm here, I might as well left justify that. Do the same there. Okay, now let's fix our dates. Our dates come in based on a text description. I don't want that. There may come a time where I want to do some kind of a calculation or lookup based on what month something is in. So it's important to have these based on a numeric format rather than an alpha format, which is what it is now. So we're going to put 1117. Okay, so now that gets me kind of a date format. And now I want a formula that automatically increments it by 1 month, so that as I want to extend my timeline out, I can simply highlight a column and copy it to the right. Makes it really easy. Now I could use my autofill command. If I go 2117, right, I can do that and it will figure it out. But here's the problem with that. Now I have to do that forever. In other words, I can't just say highlight this and copy to the right like I just described. It won't work. I'll end up with everything carrying over that May description. I'll end up with everything carrying over that May description. So we can't do that. I mean, you could, but it's a pain in the neck. I'd much rather do this. We're going to write a formula equals date, open parentheses. The first thing I need, notice the syntax. Google Sheets helps you, gives you tips for the syntax or how to write the formula. So I need the year. I'm going to open up parentheses of whatever is to my left, comma the month, open parentheses of whatever is to my left, plus 1. I'm going to add 1 to that, comma the day of whatever is to my left. And that's especially important because I want to make sure that it's ultimately pulling a value based on the first. Now, if I wanted to, I can take this whole column and copy it across, and you see how it updates like that? The next thing I want to do, and this is my own little housekeeping thing, is the months that represent projected months, I always just color code the top so I can clearly see where that dividing line is. So I know that everything through May is historic and everything from June forward is projected. Let's copy that back out a little while longer. So 12 goes out to June. I typically like to do this out about 18 months. Anything beyond that, really anything beyond 12 months to me is pure speculation. So we've got our balance sheet timeline set up. Now I can take this whole thing, Control C to copy, over to the profit and loss, Control C to paste, right? And again, let's go Control C, Control V, and I've got the same thing. Now, I don't know about you, but I'm not in love with the way these dates look. I think we could do better. Oh, and let me do my color coding here so I know. Same process. Another thing I love about Google Sheets that you could never do in Excel is you don't have to have all the extra rows, right? Notice Google Sheets stops here. It's easy to insert rows, or columns rather, and the same thing works on rows when I need them. But this way, especially if I'm trying to jump across the sheet really quickly, you know your control arrow commands, control and the right arrow, gets me right to the end of the spreadsheet there. If I had all the columns that Excel comes with, and there's no way to remove those in Excel, then it's just a pain in the neck. You know, I end up way out there and I lose my place very easily. Now let's get the formatting to look prettier on these dates. So we want to retain the numeric format, but we want them to look nice. Remember, we're presenting this. Somebody's going to be reading this, yourself, starting, and then you might be sharing this with others, maybe giving it to investors, who knows, right? So let's go to format, and we're going to go to number. We're going to go straight to more formats, and then here where it says more date and time formats. And now you can customize it as specifically as you'd like. So I like the double-digit month, the double-digit day, and the quadruple-digit year. And actually, since this is just a month and year kind of thing, I don't necessarily need the day to show up. Let's just put a space there. So I just have month and year. That's really all I need. Although, forgot about that. Let's go back. Format, number, more formats, more date and time formats. Since I'm going to go that route, I want the abbreviation of the month, right? Month as abbreviation. Apply that, and look how gorgeous that looks. All right, then Control-Shift right arrow to highlight that whole range back to the balance sheet. And you can actually just paste that right back in, because when you paste it now, it takes the formatting along with the formulas right back with it. So that works beautifully. Now we're ready to build our statement of cash flows. So I create a new tab, double click here, statement of cash flows. And the easiest way to do this is to take all your balance sheet accounts and copy them over. We'll start there anyway. And I know I'm going fast, but it's a video, so pause as much as you need to. Try this on your own and catch up. All right, the QuickBooks sample file, by the way, you can find by just Googling QuickBooks Online Test Drive, and you'll find it. It'll be right there in the top of the search results. Now, I want to actually start with the net income figure. Very quickly, and I'm not going to get into too much detail about the statement of cash flows and how it works. I don't expect you to understand it. Even as an accountant, I didn't understand it for a very long time. When I first sat for the CPA exam, I just blew by the statement of cash flows problem that I remember being asked to prepare, because I just knew better than to even try. It can get very tricky, but I will make sure that you walk away from this understanding what you do need to understand about the statement of cash flows in order to understand what we're doing here, right? So some of this you might follow along mechanically. Some of you already probably do understand this. I realize I'm not the only person in the world who understands the statement of cash flows. My point is that if you're a small business owner who's not an accountant and you have no clue and you're completely overwhelmed by the idea of this, don't worry about it. Lay that aside. I promise you I'm going to give you what you need here if you stick with me. And there's going to be probably a 20-minute or so video. We're going to probably go another 8 minutes or so before this is done. But rest assured, all you need to know how to do is build this, and then you'll understand how it works, I promise. So the first thing we need here is the net income figure, and that's going to come straight from the profit and loss. So we're looking at January. I need the profit and loss. I need January's net income figure. Also really helpful, because we're about to do this kind of stuff, to split up your screen. So let's go to View, Freeze. We'll say up to current row, right? That was one too many. I can click and drag that right back up. That makes that easy. View, freeze. I think it's 2 columns. No, there's not. And we have merged cells down here that I forgot to get rid of. This you can just delete. You don't need this in here. And that's a perfect example of how merged cells can really get in the way. I can't stand them. Whenever I find them, I immediately get rid of them. We'll freeze 1 column. This way, no matter how far to the right I go, I can see my accounts, or I can Control-Shift page down to change tabs. Okay, back to where we are. So this way, as far out to the right as I go, I can see my accounts. As far down as I go, I can see my months. Kind of important, especially for something like this. Let's do the same on the profit and loss. View, freeze, current row, back up, view, freeze, 1 column. And again, same problem. Notice Shift Spacebar highlighted the whole row. A lot of your same shortcuts that you got used to in Excel are all here. All right, View, Freeze, 1 column, Statement of Cash Flows. Now let's say this equals profit and loss. And this is why that's important. When I'm trying to write a formula like this, I need to see what planet I'm on. Right, so I'm going to grab that January net income figure. Of course, this is not making this easy, but I can also tell that it's column B. So I know that's the right January of the right year. Hit enter. Hit enter. One more time. There we go. Copy and paste down to the right. Now, these all look the same, of course, because I just, on the P&L, copied everything over. That's going to change. The point is this has become dynamic because it's now linked back to the profit and loss. So if I go back here, and this will give you kind of some foreshadowing here into how this is going to work. If I start zeroing out my numbers here, so that I know that they're just sort of placeholders. And let's just say that equals that. Copy that down. This is eventually what we're kind of going to do. And now that I've got that set, I can just copy that to the right. And let's do that for everything else. Great, so now everything's zeroed out in the whole projected period. Let's check. Statement of cash flows, boom, projected period starts in June. All zeros, right? Just in case some of you didn't believe me. I know there's skeptics out there. All right, we got to move quickly. We're going to take this and clean it up. First of all, I don't need the actual bank accounts. The whole point of this, as you'll see at the bottom, is to reconcile this net income figure to the cash that we have in the bank. So we're going to get rid of everything bank account wise that we just pasted in from the balance sheet. It just gets, the point of doing that was to get most of what we need in place, right? So that's not what I wanted to do. I wanted to delete these rows, right? So we'll take accounts receivable. I don't need any total lines. I don't need the other current assets description. All right, we do need undeposited funds. Going to keep the fixed assets description because I'm going to need to know clearly where that stuff is later so we can reorganize this a little bit. All right, all these kind of captions, headers, what have you, I don't need. I just need to go straight down to accounts payable. I'll keep my credit cards descriptor in there. We have our sales tax stuff. Loan payable we'll need. Okay, and we'll keep the equity part described there. You'll see why. Okay, next thing we want to do is we just want to clean this up a little bit. Unfortunately, the way QuickBooks Online exports these accounts, it puts these extra spaces in the names. Now, I'm not going to make you watch me do all this. I'm going to do a couple just so you can understand what I'm doing, and then I'm going to pause the recording and then continue once it's all cleaned up. But I want you to see how to do this because some of you are probably as OCD as I am and are going to want this cleaned up. See, like that was bugging me because I had a lowercase I on the income. All right, so what do? We just have to get rid of these leading spaces here, right? So accounts receivable. The other thing we need to do technically is insert a line just above this, and we're going to label this part of it called cash flows from operating activities. Okay, so we've got accounts receivable, we've got inventory, we've got undeposited funds. So I'm just clicking up at the top here and getting rid of these beginning spaces. We're going to go past 20 minutes here. I want to get this done for you, of course. I'd hate to split it up and make you wait a week or something to get the other part, but you're welcome to pause this and come back to it as often as you like. Just don't forget to bookmark it and don't forget to subscribe. So I cleaned it up, off recording, pause the recording. Now we're back, and I did leave a few kind of major sections here for us to be able to go through. I mentioned we're going to want to reorganize this a little bit. All right, let's make that whole bold. And we have operating activities. Fixed assets are fine. Credit cards, other current liabilities, all good. Actually, the fixed assets are the first thing that need to be moved. We have the truck and the original cost. So click and drag. This is, by the way, right here, you're looking at something that Google Sheets does that. Last time I checked, Excel does not do so well. We want to go above the equity section with that. Okay, let's insert above. Couple degrees of separation there, same there. Control Y, since it was the last action was to insert a row, Control Y will repeat that action. Really handy little tip there. Okay, moving my microphone away from my mouth so I can reach the keyboard more easily and stay focused here. When we buy fixed assets, this is what's called investing activities because we're investing into the company. And it's a good thing. These are going to be mostly cash outflows, right? Because I pay for something, that's money going out of the bank, which, by the way, was not included in net income because we put them on the balance sheet instead of on the profit and loss. Instead of recording it as an expense, I buy a truck, I put it into fixed assets, I spend $10,000 on a truck. That's $10,000 that needs to be subtracted from net income because it wasn't included there in order to arrive at the cash I have left in the bank. So the simple explanation for the statement of cash flows is it starts with the net income, and assuming that the net income would be the net cash flow, it then analyzes the changes to accounts on the balance sheet to determine how do we use that activity to reconcile net income to cash. So again, if I buy a truck for $10,000, that's cash that walked out of the bank account that isn't reflected in this number. So I have to subtract it from this number. So you'll see if there's a purchase of a fixed asset, it's going to show up here as a negative number in order to get from net income to cash. That's what the statement of cash flows does, period. It's confusing because you're used to looking at the balance sheet and P&L where the numbers you see are balances. Whereas here in the statement of cash flows, you're not seeing balances, you're seeing changes to balances. So that's where it gets a little tricky. So we've got operating activities, investing activities, and the equity section essentially is your financing activities because this is how you finance the company, right? And this is what you don't want to see. You don't want to see that too much of the cash flows are coming from financing activities. It means we're putting money into the business either out of our own pocket or by way of investment, right? The other thing is the long-term liabilities are actually considered part of financing because they're long-term. Now, let's write some formulas. So we're going to take the change to accounts receivable to figure out what we have to do to accounts receivable to reconcile net income to cash. I'll give you another example here of how this works and what this looks like. If assuming, let's say it's the first day of business, I have no money in the bank, I haven't done anything yet, there's not a single transaction recorded. Let's say I now record an invoice for $100,000. I'm going to show net income here of $100,000 because I booked an invoice, right? An invoice increases my income. It says, okay, we've just invoiced somebody, we've earned the $100,000, but we haven't been paid for it yet. So if accounts receivable increases more than it decreases in a period, what that reflects is amounts that are not included in the net income figure, right? Or that are not included in cash, that are included in the net income figure. So an increase of $100,000 to accounts receivable means I have $100,000 in net income that's not yet included in cash. So I'm going to have to subtract that out. So let's look at the balance sheet. Now the first month gets a little tricky, and you're going to want to insert one column to the left, right? Because we're going to have to write the formula almost pretending for a minute that there was something here. Also, the same thing is the reason why the first month in the statement of cash flows is going to get a little tricky because we're dealing with this sort of transition where it's like we're setting up the books, right? So we go down to accounts receivable, and based on what I just described, remember, an increase to accounts receivable has to come in here as a negative number. So that tells us how to write the formula. I need to take the prior month minus the current month to get my formula to work. So let's go back to the statement of cash flows. We're going to say equals, go to the balance sheet, say that minus that. Sure enough, I got my negative number. I can copy that across. Now, once I have this done for any asset account, it works the same for any asset. So a little formula writing trick. Rather than sit here line by line doing what I just did, I can copy all of these down, the accounts receivable, then go to the balance sheet, and where's my inventory asset figure? It's on line 16, notice, right? Let's go back to the statement of cash flows, and we're going to click right into the formula and simply change the line number to line 16, and we're going to copy that across. And if you want to double check yourself, just look at this. So we have no changes to the inventory asset until May of 2017. Let's say if that proves to be true. Sure enough, it does. All of a sudden in May, we bought inventory for $596.25. We went from 0 to $596.25. We increased inventory, which means we paid for something, inventory, that wasn't included in net income yet, because it doesn't get into net income until I've sold it, and then it becomes cost of goods sold, right? So that means this is working. Then notice it stays at $596.25. I didn't buy any more inventory, nor apparently did I sell any. So my statement of cash flow shows no change. Remember, that's the key to this. These are not account balances. These are changes in account balances. So all assets are going to work the same. So undeposited funds, another asset account. Let's go to undeposited funds, line 17. That should have copied down perfectly because inventory asset was on line 16. And sure enough, it did. Now we get to the liability starting with accounts payable. So this is going to work the exact opposite. If accounts receivable was calculated here by taking the prior month minus the current, then a liability, which is the opposite of an asset, has to take the current month minus the prior. So let's go over to here, click equals, balance sheet. Let's go down to the accounts payable line, and we take current minus prior. Take that, copy that across. Again, all liability accounts are going to work the same, so copy it down. And now we just need to find out what row number MasterCard is on. That's 33. Statement of cash flows. Back there. We're changing the formula to line 33. So again, for this part, if you're building this, pause and play as much as you need to. And all you have to understand is mechanically how to get these formulas to work. Check them the way I showed you. And all we're doing now is copying down the same account type and altering the line number to agree. It's just a quick way of getting it done. These sales tax accounts are also liabilities. Let's copy them all in. They're all going to be adjacent on the balance sheet. So Arizona Department of Revenue, we go to the balance sheet, and that's line 36, and then the others should copy down perfectly from there. So let's go into here, change the row number to 36, copy that down, and copy all that across. Okay, get rid of the extra blank row. Now we have our investing activities. Trucks, these are assets, so they're going to work the same. They're just classified a little differently for the purposes of the statement of cash flows. So I'm going to take any asset account now, copy it down, and now let's go figure out the row number for the truck from the balance sheet. That's going to be back up here. And it's all really an original cost, right? Truck was just a header. So we're going to get rid of that extra line, and we're going to put that in at row 22 is where the formula needs to point to. So let's go here, row 22. Looks like we bought a truck for $13,495. Sure enough, that's exactly what happens in April. Shows up here in April. So we know that's working. Let's get rid of this formula. We don't need it. This is just a header, and this is the original cost of the truck. We are almost done with this part. Now we get to the financing activities. Long-term liabilities, and for that matter, equity accounts all work the same way. Equity accounts work the same way as liability accounts. So let's put in a degree of separation there. So we just kind of, oops, that's not what I wanted to do. One of these days I'll get this to work the way I want it to. Insert one above. There we go. So long-term liabilities. I need any liability account like this one. And it works the same way. Paste that in. Let's go back to the balance sheet. Long-term liabilities. And it's really just notes payable line 42. So let's take that. Copy it down. We really needed this row. That's a header. Get rid of those. And what line did I say those were? 42. That's right. Change the row number to 42. Okay, equity accounts work the same way. Opening balance equity, line 46. Copy it down. And let's just check that these row numbers were adjacent. So retained earnings, no, it's, well, retained earnings is line 47. 47, net income and total equity, 48 and 49, perfect. Now, we need to get rid of this net income line. You know why? We already got it up there. We don't want to double count it. We're not going to balance. So let's get rid of that. And we don't need total equity because that's a total. Now we're ready to start writing some total formulas here. So first we have cash flow from operating activities. Let's make that stick out a little bit, right? And then we have cash flow from investing activities rather. And let's title this properly, right? And this is cash flows from financing. And again, I'm using my format painter because now we need totals on each of these sections, right? So let's go here. Let's insert one above. One more. I think we need one more. Total cash flows from operating activities equals sum. Make sure that you include the net income figure here. Right, so this needs to go all the way to the top, including the net income line. Copy that across. Get rid of the extra stuff. Okay, then we have shift spacebar, highlights the row, insert one above, one more time and one more time. Total cash flows from investing activities. And even though it seems like overkill because we've only got one row here, the point is you want to set it up so that your template is ready for anything, right? At a certain point you might add more fixed asset classifications in there. And this finally started to bug me that we don't have consistent numeric formats on these numbers, so I'm going to fix that right here like this and like that. That should make it all look nice and pretty. And then we have cash flows from financing activities. So I'm going to copy and paste this just to get the formatting there. And then actually all I need to do is say total. I'm a big fan of shortcuts. I don't like to type things twice if I don't need to. Another thing I forgot to do, view, freeze up to current row. View, freeze, one column. That should help. Equals sum. Copy that across. Get rid of the extra stuff. Let's also give these maybe a little shading so it's clear where our totals are. Nice dark blue. All right, click the format painter, next total. Great, now we need to calculate cash. So we say cash, we say beginning, actually no, sorry, first net cash flow equals the sum, and this time we're going to use our comma delimiter here. We need the cash flows from operating activities, comma, cash flows from investing, comma, cash flows from financing. So we just get a total of each of those subtotals. Now we can say beginning cash balance, which in this first month is the month, like I said, it gets a little tricky because we're kind of establishing that starting point. So I'm going to put a 0 in there. And then we say ending cash balance. And that's simply a function of whatever we started with plus whatever the net cash flow was for the period. Now starting in month 2, that month's beginning cash balance is equal to the previous month's ending, right? It just flows right over into the next month. That gets calculated the same way. Remember, that's why I said this first month into the second month is a little tricky. Once we've got that established, we can copy that to the right. And this is starting to really make me crazy. And now we want to compare with the balance sheet to make sure it's calculating correctly. I'm almost always out of balance on the first go around. So let's see how we do. And we just need the total to compare with. Looks like we may have done okay. Okay, and then we just write a quick formula. Say take that minus that just to make sure my difference should be 0. And it looks like we are balanced right on the first go around. So that's awesome. So my friends, we've gotten through actually everything but the last step in my write-up. So this might be a good place to pause, kind of absorb. If you haven't already done so, go through the steps and catch up to where I am here, because now in another second or a minute, or after you've paused and hit play again, the next thing we're going to look at now is how to build our schedules, because this is where we start actually building the budget. What we've done now is we've created the template. So everything's in place, everything's balanced, right? And then the other thing you're going to want to do now is kind of project your numbers. So let's start off simple, just to get numbers filled in here on the income accounts, right? And again, this is a good place to pause if you need to catch up with me. So pause it now and then come back and resume once you've got your own version of this template. And yes, you can have the copy that I provided to follow along, but you're really going to learn this stuff well. And you'll have a really easy time of doing it on your own books if you practice using the Test Drive QBO company and do everything that I've done exactly as I've done it right up to this point. So for income accounts, let's just take an average. So equals average, open parentheses, and we're going to take the prior 6 months, 2, 3, if we even have that much here, perhaps not, right? And then if you copy that to the right, it's going to do what's called relative referencing, right? So it updates. So my first cell here is taking the average of all of this, right? My second cell is going to take the average of now everything from February included, right? You can click in the formula and it'll highlight for you kind of what's being included. Right, so if we go there, notice the range updates as I go across. So let's do that for all other income accounts. Another little smart thing, by the way, Google Sheets does, notice I didn't lose my formatting when I copied and pasted, even though there's a border there. With Excel, you would have lost that border and you would have had to recreate it. It's one of those little annoying things about Excel. We'll take an average of the labor, cost of goods sold. We'll take an average of this and of that. Okay, and let's do the same thing on all the expenses for now. You are going to want to go through this stuff more specifically and decide. In some cases, the average might be sound, but in other cases, like when we get down to rent, you're going to want to do it sort of more specifically, right? So let's copy that stuff down. You know, like legal and professional, I don't know if I'd do an average. I'd probably look at the accounting and say, all right, when are our tax returns being done? Let's plan on having to get that extra, or not having it, let's plan on getting that bill for the taxes come April, right? Or March for a corporation, of course. Okay, so we'll leave those blank. Let's do an average for repairs. And since there's only one thing for repairs and maintenance, it kind of ends up being the same. Okay, meals and entertainment, again, you can do an average. Rent is where it's going to be the same every month, right? If you have a triple net lease, then you might just put an estimate of what your average monthly rent is going to be with the CAM charges. And then, of course, when you compare your actual to this, you'll see, and if you're way off on that estimate, then of course you can adjust that. As I mentioned, the write-up is the very specific and exact point of doing this, is so that you can analyze things like that and then adjust as needed and as you go. I'm just looking for a row here that's got my average formula in it. Probably would have helped to be in a projected month. See, that's where the black marking I put up there is really useful. There's the rent. The only other thing I need here is my miscellaneous. And actually, miscellaneous, I'm going to say we should project to be 0, because we really should never have anything in miscellaneous. I hate that account. It just becomes a dumping ground, and I never know what's in there, especially $2,000. If anybody out there is so rich that they can afford to just dump $2,000 in a miscellaneous account, please write me that check. Now, we've got this set up here. The balance sheet will need to be a little bit more specific about how we're projecting stuff. So the cash balance is actually going to be pulled right from the statement of cash flows. This is how we flow it back. So what I like to do, first of all, make sure my formula is going to include this row here, because that's another way that we distinguish exactly where the projected numbers are. I'm not going to project the cash per bank account. That would be next to impossible to do. So I'm just going to go up here and say equals. We're in June of 2017, so I need to be out in June of 2017. Where's my ending cash balance? It's right there. We're going to come back and highlight that ending cash balance row, so it's easy to spot. All right, now here's this. Now accounts receivable, there's a number of ways to look at this, but if you're assuming you're on a basic 30-day cycle, then there's it's basically a really simple formula. You just say you take accounts receivable and you set it equal to whatever this month's total income is, right? Assuming everything goes in to be paid later. Total income for June would be that. Because what this is saying is on a 30-day collection cycle, my accounts receivable is going to be whatever I billed this month, right? Because whatever I had in accounts receivable last month presumably will be collected this month. So that's one way to do it. It's a very rough, simple way. You can get more complicated about the formula for this. I've already gone on for 40 minutes. I don't want to make this a 3-hour video. So I'll leave it at that. You can set it equal. There's other ways you can write the formula if you want to be more specific, especially if you have slower collection periods like 45 or 60 days, right? Inventory asset, probably want to build a schedule, especially if inventory is a big area for us, so that we can be specific and plan on cycling up the purchases in some months and plan on bleeding the inventory down in other months, right? Undeposited funds theoretically should be 0 because it's just a clearing account, and I need to what do you call it? So presumably whatever's in there is going to be in there for a minute, and then it gets deposited. Undeposited funds simply needs to be zeroed out. It should be 0. It should stay 0. It's money that's only in there for a minute and then gets deposited. So we're going to set that at 0. This we're going to leave alone. It should stay the same unless we go out and buy another truck. So we really just have it set at whatever it is in the previous month. And if we do think that we're going to need to look at that more closely, if we think there's going to be a lot of activity in that sort of account, then we build a schedule for it, which you're going to see how to do finally in just a few minutes. The credit card, kind of the same thing. It's, I'll talk to my clients when I set this up for them, and I'll ask them, does your credit card balance fluctuate much? And having the history here, usually we have a lot more history. This is a sample file, of course, but having that history here helps me see if the balance is roughly the same. A lot of times they'll tell me, like if it's an American Express card, hey, we paid off in full every month, but then we charge stuff on it again, so the balance tends to hover around the same amount. So in that case, you can leave it the same or do an average. In other cases where there's that and other kinds of debt, and especially where there's lots of different debt instruments, we will build out a full effective interest schedule where we'll look at each separate debt instrument, what the interest rate is, what the monthly balances are, and then we'll plan a whole schedule for getting that stuff paid down if we can. So, and that might be the case with something like this loan payable. Now here it looks like we've just established the loan. So again, it needs to be a conversation with somebody. How is this going to get paid off? Maybe we're going to pay off $1,000 a month, right, until it's paid down. So in some cases like this, we can just be very specific about it, especially for, if this is like a term loan. Then we just plan this. And of course, we make sure that we got the interest expense built in properly. Same thing here with a long-term note payable. This is a little different. So maybe this is going to be $2,000 a month until it's paid off. So simple formula, just take the previous month minus 2,000 and we get down to 0 here. So this is a very quick way. Normally, like I said, I will build a schedule out for this kind of stuff. We'll leave the opening balance equity alone. And of course, the net income for the projected period, we need a formula for this so that it works properly. And essentially what we need in order for this to all stay in balance is we need to take whatever it is last month, because remember, we're in the balance sheet, not the profit and loss. So this is a different net income figure. This is the net income figure that closes out to the balance sheet each month, which means it's cumulative. So we need to take last month's net income plus the current month in order for us to stay balanced on the statement of cash flows. So we go out to the P&L, current month net income, enter, and we want to copy that across. Okay, now we've got this built out properly. We've gone through the balance sheet and the profit and loss. We've developed at least a starting point for the assumptions about what things need to be. And of course, everything's balanced here. We're out of balance in May by $900 because I probably changed something here that I didn't mean to. So let's go back to the balance sheet, or that sounds like rent. Yes, it does, because I changed it here and I don't think it was 900 here. Maybe that's it. Let's see if that fixes it. Yep, that was it. So I think when I copied across, I just quickly looked and thought, since there was nothing here, that And this is another reason, by the way, why this is important and useful to do, because laid out like this, and then being forced to take the time to go through this, so excruciatingly line by line, this could be a problem. So what's probably going to happen is this is going to be $1,800, right? And then we're back to $900. We probably haven't paid it yet. And there's things we can do with our accounting software to normalize this kind of stuff. Like, even though the rent payment is $900 every month, what we can do is just have a bill go off every month on the 1st for $900, so that drives where the expense shows up. And then the actual payment will just become a payment on that bill. This way we're properly matching up our income and expenses, which is true accrual basis accounting. And even though you're filing on a cash basis in many cases, you're still running your business on an accrual basis. You still need to know that it cost you $900 for the month of May to rent your offices. So even though you didn't pay it in May and you just doubled up in June, we want this normalized. We want to see what the true expense is for each month. What did it cost us to operate that month? So that's why that stuff becomes important. Now we're ready to build a schedule out, and I mentioned in the write-up and the outline that we need 2 different kinds of schedules, one for a profit and loss based account and one for a balance sheet account. So let's take a look at that real quick. We're going to take the profit and loss, and I'm going to right click it, and I'm going to duplicate it. And then what we're going to do is we're going to say PL, because it's a profit and loss account dash account name. So this is just the template that we're about to create. And really all I need in here is the timeline. So we're going to get rid of all this stuff. I'm going to copy from here down. Basically, I'm just copying blanks. So this gives me a blank form, basically, that I can use for any account. So now let's go look at an account that we might want to create a schedule for. So let's pick on something fun here. Let's say the bookkeeper. I don't know why we don't have any bookkeeping expense in here. Maybe we planned on doing it ourselves. But let's say we want to create the schedule that's going to flow back to this line item. So let's do that. Now that we've got this template, I'm going to make a copy. So I'll duplicate it. Okay, and this is going to be bookkeeper. Right, now we can get the copy out of there. Control C on that, profit and loss. And basically we can pick any line item here, depending on how much details you need on something like this. Probably not a lot here. And it may be that your bookkeeper is a set fee. Hopefully, if your bookkeeper is doing things like I do things, they charge you a flat fee. So let's say you're going to pay them $1,000 a month. Right, we're going to get rid of the extra stuff. And then I really don't need that many more lines. Here I might put the name of the bookkeeper or the firm that I've hired. ABC Bookkeeping. Right, total bookkeeper equals sum. And what this allows me to do is it allows me to put in other stuff if I need to. Maybe I have some cleanup work to be done and I'm going to hire another firm to help with that, right? So that might be another line item that now can easily flow to this total. Let's make this look like a total. And now we go back to the profit and loss. And on the first projected month, remember, you don't want to mess with a historical month. I did that by accident with the rent, and it throws things off, right? Because the formulas, the statement of cash flow is just counting on the historical, everything balancing, right? So now we go to the bookkeeper line here, and we say equals. And I click over here to the bookkeeper schedule, and I click on June's total. So now what I've got is a completely dynamic line item here that all I have to do is go to the schedule and say, you know what? At the end of the year, we're going to need some extra bookkeeping work done, which means we're going to plan on spending a little bit of extra money to do some projections and things like that. So let's add on another $500 a month these 2 months, and I could even put year-end projections so I understand what I'm putting in here and where it's coming from. And just by putting that in here, I don't have to worry. Everything else takes care of itself. I go over back to my profit and loss. Notice it cycles up to 1,500. That, of course, lowered my net income. My statement of cash flows reflects the lower net income. Everything still balances perfectly. And when you initially build a model and make changes like this, you always want to double check that first. Make sure, you want to be almost obsessive about coming back and making sure that this is not out of balance. Another balance check that we need to do, historically there's almost no way it can be off, but for the projected period we want to make sure all our formulas are working properly. So we go balance check, and a balance sheet balances by way of total assets equaling total liabilities and equity. So I go up to my total assets line, point to that, minus total liabilities and equity. Answer should be 0 all the way across. And again, the historical, it's almost impossible unless you have a software bug. But the projected period is where things can definitely get wacky if you're not careful about how you've written your formulas or if you override something. So these two things need to constantly be in check. The balance sheet needs to balance, and the statement of cash flows ending cash balance needs to agree to the balance sheet. So I said earlier I was going to color code this better. So we want to make it kind of stand out. Now we know how to do a P&L account. So the difference between that and the profit and loss account, and here's what I want to do also. I'm going to delete this, I am sure, and we're going to make a copy of this. Right, we're going to duplicate this because what I did, I made some changes here. I've got the total line in there now, right? So I'm just going to say P&L account, get rid of copy of. And now I've got a true P&L account template, which I can put here. I usually stick these at the end. I always like to keep balance sheet, then profit and loss, then statement of cash flows in order. And then these I start to alphabetize within, whether it's a P&L account or a balance sheet account, as you're going to see in a second, is going to have BS in front of it. And if you click this guy right here, you can get a quick menu of everything, but notice how that's going to start to show up nicely. It's going to, there's no way to automatically sort the tabs, so you have to manage that. But if you keep them sorted this way, it's going to be really easy to click this option here and find what you're looking for. And that's the name of the game here at the end of the day, is being able to quickly find what I'm looking for. So I'm going to duplicate the P&L account, and now we're going to set up a balance sheet account. Okay, and let's get rid of this stuff. Delete total balance sheet account. So you'll rename this stuff. And the key distinction here is this is going to actually be ending balance. And up here we need beginning balance, because balance sheets are cumulative in nature. So they have a starting and ending balance each month, and each month the ending balance flows over into the next month's beginning. So kind of like what we did earlier on the statement of cash flows. And I'm going to copy that across. What I did here was I just took February and said make it equal to the ending balance from January, right? So now I go in here and I'm ready with my template. Let's duplicate this. And let's just say we want to do the MasterCard. Okay, so you start to get a sense of how this might work. Now in this case, we have to get that starting balance in here. So we go to the balance sheet and we're projecting as of June, so we need to put May's MasterCard balance in here. Where's that credit card? There it is. So 123.72. I'm just going to copy and paste that for now because this is the last time we'll ever need it. Right click, paste special values, right? That's another one of those things that I think people think doesn't exist in Google Sheets, but it does. Notice as soon as I paste that in, because the way I've written everything carries down to the ending balance, flows into here. This way now what I can do is I can flow this line item starting in June back to the balance sheet, right? So let's say now that June's balance equals, go to the balance sheet account or the MasterCard account and click there. June's ending balance, we'll copy that across. And now I can go into the schedule and plan what my MasterCard spending is going to look like. Remember, increasing the balance actually improves cash flow on something like this, and I'm going to demonstrate. Because what it means is I have expenses that are included in net income that, since they were charged on a card, haven't been paid for. The money hasn't come out of the bank account yet. So if I assume an increase to this balance of $1,000, right? So we'll call this purchases. And what's great about this is I can expand this, add lines, and be as detailed and specific as I want it to be, especially if I know there's going to be some major purchase that I need to put on the credit card some month in the near future, right? So I put in my purchases. Of course, that adds to the balance. I'm going to take that out for a second. So let's take a look. Right now, the balance sheet shows this. We know, obviously, that's going to say $1123.72. The more important thing to understand is how this impacts the statement of cash flow. So let's go to June. And right now, the MasterCard balance doesn't change starting in June, right? It's kept the same. So let's go over to this account. I'll put in $1,000. What this should do is this should result in me adding $1,000 back on the statement of cash flows to the cash balance. And sure enough, it's positive, right? And so that's going to increase my cash balance at the end of the period. Notice here's the loan payable, which I manually went onto the balance sheet and just assumed $1,000 monthly payoff. So that's showing up here also as minus $1,000, because that's $1,000 that leaves the account every month. That is an interest expense. It's the principal portion of what we've paid down on the loan. And so that is an amount that comes out of our bank account that's not reflected in net income. So we have to account for it here. That's another thing that reconciles net income to cash. So that's about an hour's worth, my friends, and you've seen a very thorough run through of how to start from nothing, basically, in QuickBooks Online. I went so long I got timed out in QuickBooks Online, but how to start from nothing and create your killer small business budget template that's going to save you time and money. Now the trick, of course, to this is each month running a variance analysis. I'm not going to do that in today's video. Maybe I'll do it in a future video, especially if enough of you post your comments and questions on this and let me know that that's something you'd like to see. As always, I hope you had some fun, learned something along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.